Hello and welcome to another video with me, Rauchenwald. In today's video, I'm going to share the, in my opinion, 3 biggest mistakes you want to avoid while copy trading to help increase your long-term performance significantly. But before we get to that, as always, let's get the usual disclaimer out of the way. Everything I share in this video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions and make your own decisions. With that out of the way, let's jump right into it. Over the last couple of years trading on eToro, and especially since I myself became a popular investor on the platform, I've noticed a couple of mistakes that people make over and over again that in my opinion make the difference between achieving decent returns and losing most of your money, and in this video I'm going to share all of them with you. Mistake number 1. At the time of recording this video, there are only around 50-something people out of all users on eToro that copy my portfolio, while there are, for example, more than 23,000 people that, for example, copy a portfolio like this one. I'm just kidding, of course, that's not mistake number 1. In fact, if you check out my last video, which you can find by clicking on the card up here, you'll notice that especially for beginners in quotes or those that have a lower risk appetite and want to play it safe, I wouldn't include my own portfolio right now in the list of recommendations anyways. So let's talk about the real number 1 mistake, and that is people tend to invest money that they cannot afford to lose. It might be obvious to you, but the last couple of years have shown me that over and over people are expecting to make insane returns overnight on their investments, and as a result often invest money that they actually need in a few days or weeks to pay their bills. There is not much else to say about this, so make sure that whatever amount you invest is something that you definitely don't need in the foreseeable future, so you won't be forced to sell it at a loss. Mistake number 2 is also part of that, and that is don't expect to have huge returns overnight or every day. Understand that it takes time and patience to achieve wealth, and that when it comes to trading and investing, even the best investors and traders out there will have losing days, weeks, and here and there losing months short term, but should provide you with decent returns long term. Related to that, Warren Buffett probably said it best: the stock market is a device for transferring money from the impatient to the patient. So overall, slow and steady is the safe bet here. Taking huge risks might work out a couple of times, but it only has to go wrong once to blow up your account. To show you an example of mistake number 1 and 2, let's take a look at the last 9 people that stopped, for example, copying my portfolio. As you can see, most of them stopped after 1 day because they probably expected that my portfolio achieves 2 or more % return every day, which simply isn't possible. In the end, they ended up losing anywhere from 0.05% to 0.14% just for the spread they paid to open the positions and then close them again, and will probably keep doing the same with the next popular investor they copy if they don't see insane returns within 24 hours. The 2 people on that list that stopped copying after only 4 and 5 days made a similar mistake but with a bigger loss. They likely didn't read my biography or pinned post or look at my stats, because otherwise they would have known that my portfolio historically has a yearly drawdown of up to 15%, and that my positions are usually long-term, so it's normal as said to have losing days, weeks, and on occasion a losing month in between. The sad thing here, especially for the last 2 that stopped copying, is that since they stopped copying my portfolio, it actually gained more than 5% again. So to summarize mistake number 1 and 2, always make sure to only invest money that you definitely don't need for at least the next 6 months, and that you properly research the portfolios you are going to copy in the first place, as explained in my last video, which again you can find by clicking on the card up here. Don't expect to become rich overnight and accept that this is something that will take time. If you take unnecessary risks all the time or are impatient, you most likely will just keep losing money, while if you are patient and invest a bit of time into researching the right different popular investors before copying, you should achieve much better results over time. And that brings us already to mistake number 3, which might be the worst, and that is the lack of research most people do, or better put, don't do before copying someone. Many people simply copy a portfolio because the statistics show an incredible return either for 1 month or an entire year, and expect that number to be accurate and the future return to be the same. As a result, if we take an extreme example by looking at, for example, this portfolio statistics, people start copying because they expect to become rich overnight. After all, who wouldn't like to get 22,000% return on their investment within just 1 month or within 1 year? All users would have to do to avoid copying a portfolio like this, or get the right expectations at least, would be to check the graph on the user's profile, and in this case also take a look at the recent posts and comments on that popular investor's newsfeed to see that the stats here are simply wrong. But as so often, greed and impatience sometimes get the best of us, and we then pay the price when instead of expected return we suddenly look at a huge loss. And just in case it isn't clear, the reason why I know these mistakes is first of all because I obviously witnessed them, but because I've made most of them as well in my earlier days investing into stocks and cryptocurrencies as well. Anyways, that's it for today. If you keep those 3 things in mind and are careful about which popular investors you copy in the first place, you should have no problem to outperform the indexes every year and achieve a decent profit that, given enough time, should compound to the amounts you always dreamed of, even if you start off with a small investment. And one last tip here that doesn't relate to copy trading specifically: if you don't already have a bigger amount of money available to invest, I would recommend that you add more funds monthly to speed up the journey. Even adding just $50 every month will make a noticeably difference in the long run when you're starting out with a smaller starting balance. But that's it. If you have any questions, feel free to leave them in the comments down below or on any of my recent posts on eToro. Thanks for watching. See you in one of my other videos. Till then, bye bye.